Hello, good afternoon, everyone. Welcome to our webinar on using news as data for academic research, deriving insights, trends, and predictive modeling. We are thrilled to have all of you joining us today from various universities across Asia Pacific. I am Sachin B. Singh from Dow Jones, and I will be your host/moderator for this webinar. Today, we will be exploring the fascinating world of utilizing news archives and metadata for academic research. And for that, we have gathered a distinguished panel of experts to share their insights and experiences with you. We have Gavin Fung from City University, Hong Kong, Kristen Moller-Sexton from Royal Melbourne Institute of Technology, and Anand Vijay Sankaran from International School of Business, Hyderabad. We encourage all of you to actively participate in the discussions, ask questions, and share your thoughts. We believe this webinar is a great opportunity for us to learn from each other, exchange ideas, and deepen our understanding of how news can be harnessed as data for academic research. Once again, thank you for joining us today, and let's dive into the world of news data and unlock its potential for academic research. Without further ado, I would like to call upon our first speaker, Gavin Fung. Take it away, Gavin.
Thank you, Sachin. Thank you for the kind introduction. And I'm quite happy to be included in the program to talk about how we analyze news articles to use text data for asset return prediction. Okay, so I'm Gavin Fan from City University of Hong Kong. So my main research, I try to develop statistical machine learning methods, how we generate news signal from alternative data like news articles such like this. Okay, let me go through my slide. Everything is fine. So I think last week, many of you might read the news that, okay, there are some new research article about how to use ChatGPT to predict stock returns. And ChatGPT is one of the most popular topics right now for AI, for machine learning, for deep learning, and everyone might expect that it might change the world from different levels in different areas there. And we also know that like Bloomberg, they also have their like Bloomberg ChatGPT there too. Okay, so ChatGPT, or we call this kind of like large language model. Okay, they use many kind of text data. Of course, news is one of them. And for news data set there, and I'm going to show you how can we generate signal for news data. Okay, and ChatGPT, one thing we know that it is powerful to do many other things there. However, when we try to play with the like stock return prediction, we might want to focus on those news data set rather than the high dimensional. Okay, text data set are actually high dimensional. We have a different web page there, and then all other files on the internet. Okay, however, but those information relevant to the company, okay, to the company fundamental, to their future cash flow, those might be important case we are going to study for stock return prediction. Okay, so far at the beginning we know that we have like huge data set, huge text data set. However, I'm going to show you that news data is still quite important, even though this is just a tiny bit of the whole data set there, but it contains enormous signals we can use for stock return prediction, for trading, for portfolio management. So let me go to the next slide. Okay, so the background, I'm trying to talk about the news data applications in academia. That is, okay, as I mentioned, the text data is actually high dimensional. And then we see like naive-based classification, support vector machines, different kind of methods have been adapted. Okay, try to use text data, try to use news data there. And for the Jagadish 2014 paper, they also try to use the sentiment analysis, okay, to create sentiment based on stock returns. But so far, okay, most academic research we have, okay, they concentrate on English sentiment. Okay, for example, like Kirk Kelly-Shield 2019 paper, they try to develop a topic modeling method. So I'm going to implement their method later to show you how we use that for the updated news data to 2022. And another article I also want to mention that is the Fan She Zhou Okay, they try to propose a lot of topic modeling method based on PCA. Okay, however, they analyze Chinese text data. They also find out that the news data can be useful to predict Chinese stock returns. Okay, so for today's talk, I'm also going to implement their method too, to show you that, okay, we can use these two methods, one from Kirk, Kelly Shiu, and the other from Fan Shizhou, to implement on the Dow Jones news data set. Then we can obtain some stock return signal, and then which shows us like risk adjusted performance to create profitable strategies. So with such goal for today, we're going to implement those two methods on the Dow Jones data set. Okay, so we can use this to create like sentiment score to construct portfolios. For other applications, okay, even though I don't have time to cover for the day, but we can still use like macro news data like to predict macroeconomy variables well, and we can also like create like sentiment score to predict the rising interest rate, the rising the CPI, this kind of stuff. Okay, so let me go ahead. So the trading strategy we are going to provide, okay, in this 10-minute talk, that is, we are going to create sentiment scores based on those two methods I just mentioned. Okay, if it is positive, then we are going to long the stock. If it is negative, then we're going to short the stock. Okay, a very simple way. The advantage for the Dow Jones data set that is it started quite early, back in 1980s. Okay, but in our case, we have a 15-year training window. So our test window, we are going to test the stock return predictability on news data starting in 1994. Okay, so that's an extremely long data set. Okay, so we are going to test this for like 28 years from 1994 to 2022. And we are going to show if we use the sentiment score generated by the news data, we try to merge the individual company news with those individual companies there. Positive sentiment, we are going to long this company, and negative sentiment, we're going to short this company there. And for each day or for each week, we're going to generate like equally weighted portfolio for the long side and for the short side. And then I will show you the risk adjusted performance we can get for such a portfolio based on the signals, okay, generated from the news sentiment. For example, I will show you the annualized Sharpe ratio. I will show you the monthly expected return. I will show you the like alphas, okay, the monthly alpha with respect to the Fama three factors. And I will also show you the annualized maximum drawdown. So how much maximum drawdown we might get based on the strategies we have using the news data set. So here comes to the daily exercise. Okay, so the daily portfolio rebalancing. Okay, I show you two methods here. So the first one is from the fans paper there, and the other one from Kurt's paper there. Okay, so what we can see that as I mentioned, I'm going to create long portfolio based on positive signal and short portfolio based on negative signals. Okay, so here you can see 4 lines here. The orange line, this is based on the positive signal. The green line based on the negative signal there. So one thing you can see that is, okay, the news signal, they are extremely useful to help us to identify the trend, the daily trend for stock returns. Okay, so this is the equal weight for 100 stocks. This is the equal weight for 100 stocks. If we create a long short portfolio, so that is the blue line. So this is the cumulative returns from the 28 years from 1994 to 2022. If you want to know about the performance for S&P 500, like for SPY, so this is the red line, about increase like 100 to 200% something. But for our longer portfolio, on a daily rebalancing, okay, so we'll get up to 30 times, okay, cumulative returns in 28 years. So this is the other method we use. Okay, you also see similar trend to get very consistent performance for the long portfolio, for the short portfolio, and extremely high performance for the long short portfolio. So the Sharpe ratio, okay, for the long short portfolio side, both numbers, okay, they are pretty high. Of course, these are daily rebalance portfolios, so the transaction cost might be high. Okay, but still, okay, we also find that after transaction cost, the investment gains are still pretty significant. Okay, so all numbers here, they are before transaction cost. So the average return we can get like 9.72. This is on a monthly basis. 8.64 on the monthly basis, okay, for the long-short portfolio side. The maximum drawdown, if you worry about the wicks, okay, if you really worry about the wicks there, the maximum drawdown for the long-short portfolio is small because we get protected by sorting the other side of the 100. We think those stocks with negative sentiment generated by the news data set. And for the wicks adjusted performance like alpha, like for Pharma French free alpha, 9.77% for monthly and 8.72% for monthly there. And you can also see that their R square to the Pharma French three factors are pretty small, which means they are uncorrelated with the market. They're uncorrelated with those like size, like value factors there. In addition to this, I also try to implement the past 10 years. If you don't want to look at the 28 years there, for the past 10 years, the numbers are even higher. Okay, the news article, the signals we get from the news articles there are even higher for the past 10 years. Okay, so I want to say that this news, because one thing I also want to mention, there will be more news articles in the past 10 years, past 15 years than previously. Of course, we are in a digital world now, and then more news articles now. If you're worried about transaction costs, okay, we can update the portfolio on a weekly basis. So we aggregate all those new signals every week, and then we construct the portfolio for next week. Okay. Of course, once we go to the weekly basis case, the performance might be lower. We are not doing like high frequency daily portfolio rebalancing, but doing weekly portfolio rebalancing there. But the numbers are still pretty good. Okay, if you look at the alpha, 1.31 monthly alpha for long-term portfolio, 0.73 for the other one, and the most important part that is the R square. Their correlation to those like important like market size value factors are still very low. So one thing I want to say that is that if we rebalance the portfolio on a weekly basis, some new signals might disappear because those signals just are important for a few days. And then after a few days there, new signals might come. This is due to the market efficiency, right? Okay. And we also have this like for the past 10 years, there, the numbers for the farm predict method, there are pretty high. So one thing I also want to mention that, so for this one, this topic modeling method based on PCA, their numbers are pretty high. And this is one good thing we can see. Okay, so this is for the performance for the past 10 years. If you want to know about what kind of words are useful, if we can dig from the topic modeling, so you can see that this is the positive word we generate from the first method, positive word we generate from the second method, negative word first method, negative word second method there. And then those words with larger form means they are more important, like repurchase, like buyback, like, okay, these are very important words and consistent for both methods there. Okay, and then for negative word, for delay, for lower, okay, so I think those are word with negative sentiment. Okay, so we can see that for topic modeling, we have deeper understanding what kind of word in the news article can be useful to predict positive stock returns or predict negative stock returns. So the news article we have here, they generate very good data set, and then to create the useful stock return signal prediction. Okay, so I guess I come to my last slide. Okay, so what I want to show you for today, that is new sentiment scores. They strongly predict the returns, okay, from new information there. Okay, we can add predictive power for future stock returns, and then those strategies that have very low correlation to Pharma French three factor market size value there. Okay, and then the two methods we show here, we can still include other information to combine these two methods, okay, to get better signals there. If you want to hedge for inflation, we can also do something for that. Okay, so if you have any question, please also feel free to send me the email, and I look forward to the panel discussion soon. Okay.
Thanks so much, Gavin. That's really good insights in terms of how news sentiments can be used for for deriving signals for trading. So I personally might look into some of those as well. So thanks for sharing that, and I think it's very interesting.
Thank you.
And just a quick reminder, please feel free to add any questions you might have in the chat. And then let's go to the next one. We have Dr. Kristen here joining us. So over to you, Kristen.
Thanks so much for the opportunity, Sachin. And in the spirit of reconciliation, RMIT acknowledges the traditional custodians of country throughout Australia from where I'm presenting and their connections to land, sea and community. We pay our respects to their elders past and present and extend that respect to all Aboriginal and Torres Strait Islander peoples today. So I'd like to share with you some research that we're really in the middle of and probably take you in a slightly different direction here in looking at how media analysis can support social innovation goals, with particular reference to our projects on financial wellbeing and climate change. And I'm from the social innovation area and the policy strategy and impact department of RMIT. And for those of you who are unfamiliar with social innovation, it's really about engaging, using innovation strategies often used in business to help us unlock challenging social problems and solutions to those social problems. We were funded by our Victorian Government Higher Education State Investment Fund to help address the post-pandemic challenges that our state faces. And I think these challenges are probably sort of, quite common across the world in that financial wellbeing and climate change are two really important topics for us all to be engaging with, as many countries face recessions and the like, and as climate change issues become more and more urgent. The value of this research really is for us to be able to engage our university subject matter experts and community partners who have that incredible sort of engagement on the ground with issues and promoting social progress and bringing them together, to try new ways of addressing our goals. I think that the work with media analysis I see as a really valuable tool for understanding public discourse and discussions about these issues. We know that if we want to promote progress, we need to be working with the sort of narratives and the discourses that are where communities are at, where societies are at. And so being able to utilise these large data sets of news provides us with really unique opportunities. I think all data sets have their sort of strengths and weaknesses. But what I see this adding to our sort of our toolkit really is that ability to access these very consistent and comprehensive data sets of news, which, as you saw with Gavin's presentation, we can look over 30 years, we can look across countries and across languages and really get some very broad and detailed views on these topics. So I'll take you through to our first project, and we are absolutely immersed in this project and that analysis as we speak. But the essence here is we're working with a community partner, Good Shepherd, here in Australia, and they've assisted us to sort of work with a topic which is about how financial wellbeing is reported in the media. And the aim of that topic is to help develop support for people whose financial wellbeing is precarious. We're using unsupervised machine learning methods, LDA in particular, to develop those topics. And perhaps if I can just show you the nature of that data set, we've downloaded over 1.3 million articles investigating financial reporting. And it's from January 1990. And across these quite specific countries, they're always focused on English language sources. And we chose those countries thanks to our community partner. The interest is in really looking at a mix of countries and that have wellbeing budgeting approaches compared to those that don't. And so, for example, some of the Scandinavian countries, Canada, I believe, and New Zealand all have wellbeing budgets compared to somewhere like the USA, which doesn't. I know Australia is currently investigating that approach and is likely to bring that in shortly. So we were really interested in seeing whether or not we could see differences in how financial wellbeing is reported across those countries. I think perhaps one of the key learnings on this particular project for us, if you look down at that relevance statistic there, is this is probably quite a nuanced and challenging topic to do social innovation research with. We have some quite tight deadlines to produce our research by, and that this is quite a nuanced topic, financial wellbeing, to be able to sort of extract out of the financial reporting data. So, I think that's very much a takeaway for us at this point in time. But perhaps some of the early findings, as we've done our first wave of topic modelling with you, is that we're probably looking at 4 key themes at this stage, where news media reporting is focused on superannuation and retirement, financial scams, mortgages, and investment advice for the wealthy would be the sort of 4 broad areas that we're exploring right now. And perhaps a preliminary or a direction for us that we'll be exploring further is around the idea that perhaps news media is not really supporting the development of financial literacy, particularly for those in need. So we'll be developing out that topic modelling as we go, and definitely I'm keen for any comments or questions about this area as well. Now, I'd like to take you through to our next area of research, which is looking at climate change reporting, and perhaps following on from our financial literacy and wellbeing research. What we have here perhaps is a simpler task for topic modelling, in that our research topic here is how is climate change reported in the media, and that is a much broader topic and perhaps simpler to extract relevant articles out of a news media data set. You can see here we've got over 2.5 million articles from all the English language news media. We've decided to narrow down to focus on 4 countries, Australia, India, UK and US. And we're looking at topic modelling the text data, but also looking at the metadata. I think, one of the interesting areas in both of our projects is to understand gender and its influence on reporting in both of these topics. And one of the key pieces of metadata which can be very useful in exploring gendered aspects of these topics is understanding the gender of author. So to give you a flavour of the types of questions we're exploring, we're working with the Global Institute for Women's Leadership to understand gender and its influence, and as well as regional differences. At this stage, our initial findings, we've got perhaps the expected sort of common global themes around social, political, environmental and economic topics that have emerged from the topic modelling to date. My area of interest is around these social themes, and I think what I've been interested to see is how dominant opinion and editorial style pieces are, along with the scepticism and denial that perhaps you might expect comes through in news media reporting on climate change. But perhaps what I've been surprised by is to see less of the sort of social topics around health and disadvantage, which we know are really important aspects of addressing climate change currently. You'll see in the environmental topic, for example, heat waves, is something that's reported on. This is influencing countries across the world currently. Here in Australia, we have grappled with multiple bushfires, and those sorts of things get a lot of media coverage, and yet we know that more people die from the effect of heat waves than bushfires here, and yet we don't see that reflected in the media reporting. And I think these might be some of the areas that we can work with our media partners to see that we can promote progress in seeing more reporting on these social topics. What I did want to throw forward to perhaps is a provocation to discussion today, and share with you these graphs around basic frequencies and highlight the sort of diagonals there and the relationships we see between Australia in the top left-hand corner and India in the bottom right-hand corner, and contrast those with UK in the bottom left and US in the top right, and notice that Australia and India, whilst they saw dramatic increases, say in the late 2000s, it looks like around 2007 or 8 there, and that was shared by all countries. Australia in particular sort of dropped down and sort of relatively flatlined until the late teens. And I think, you know, if we compare that with what has been happening in the UK and the US, where climate change reporting really has taken off very dramatically through the late teens, ideally that's an optimal situation. We know from recent IPCC reports that climate change issues are growing in urgency, and we would like to see really media reporting reflecting that growing need for change, and yet we don't see it in countries like Australia and India. So I'd be very interested to hear discussion on some of the reasons for that. Perhaps if I can put out some of the obvious contenders will be political changes that conservative political movements that we saw in the UK and the US around 2016, 2017 could be some of the catalysts for their increases in reporting. But there could well be other factors at play, and I think that's what's really fascinating is how do we get those same sorts of changes in countries like Australia and India, so that we can draw more on the media to help us to progress action in climate change. So if I can finally thank the team who's been working on this. In the yellow box, you'll see this work has been led by Nithya Solomon and supported by the whole team. Campbell, Simondo and Brad really are the technical expertise working in this area with me. And I'd like to acknowledge their work. I'd also like to draw your attention to some work that we've previously done with this data in the areas of gender studies and health that are out there and currently published that you might like to access if you're interested in learning more about how to use this type of data. But really, we will be presenting our findings by the end of the year, and we would be very keen to engage further with people who are interested in understanding more about financial wellbeing and climate change reporting in the media. And I'd like to thank you for the opportunity for sharing our findings.
Thanks so much, Krishnan. This was really insightful, and it's amazing to see how new data can have implications on so many different fields, right? From economics to political science to social sciences and so on and so forth. And one thing which resonated with me was the ask about financial literacy, right? So I think financial well-being starts from there. So I think that's an important point you highlighted there. So thanks for your presentation, Krishnan. This was really lovely. So yeah, guys, last but not least, we have Anand joining us from ISB Hyderabad. Anand, over to you.
Good afternoon, everybody. My name is Anand RV, and I'm a professor at the Indian School of Business in Hyderabad, India. My research interests include strategic leadership, governance, and the role of the media. Primarily, from a phenomena perspective, I'm interested in CEOs and top management teams. And so most of my research concerns these two audiences. In the last 2 years or so, I have been using Factiva a great deal, particularly their API solutions. And this is in order to understand how our CEOs and top management teams covered by the media, along with how their firms are being covered in the media. At this point of time, I primarily am interested in coverage that CEOs, organizations, and top management teams, within the context of United States, and then try to understand what are the reasons for why a particular firm gets more coverage in the media, or why a particular CEO gets more coverage in the media, and also more recently to understand the consequences of that kind of coverage. What does it do to individuals in the organizations? For instance, there is some research suggesting that the more negative media coverage that a CEO gets, the more likely that they are going to be dismissed. The more positive coverage that a CEO gets in the media, the more likely that they're going to receive a higher level of compensation in the years following the positive media coverage. So, all in all, Factiva Media can potentially give really useful information to researchers like us who are interested in CEOs and top management teams. I'm going to talk a little bit about some of my research papers, and these are findings that are fairly recent. They are currently in further stages of analysis, and hopefully you will be reading about them in a good high quality management journal soon. One question that we were interested to understand is whether media coverage has any influence on firm innovation. And to answer this question, we first collected data on CEOs' media coverage. We primarily used Factiva's API solution. Now, one thing that you want to keep in mind while if you're doing similar research or if you're interested in similar questions is that you want to be very clear about what are the sources that you're going to use to download the media data. Now, Factiva has got obviously a vast amount of information, and your organization may not necessarily be able to download all the data that is there, that is aggregated by Factiva. So one thing that I would urge researchers to keep in mind is to narrow down the sources that you are using to collect the media data. I, as a researcher, because I'm interested in North American data, and knowing fully well that North America has got a very, very powerful media landscape, I could have, on the one hand, chosen about 4,000 newspapers. But that is not possible because the number of articles may well run into, more than 10 million or 12 million articles. So in order to manage that, what I decided to do was I narrowed down on number of publications that I would be interested in. Primarily, I looked at the circulation numbers of US media outlets, and I just narrowed it down to 10 newspapers, 10 of the largest circulating newspapers in the US. And I also chose 5 business outlets that were covered by Factiva. And then after that, I made sure that to collect the Factiva codes for these 15 outlets. Now, after that, I then, what kind of firms would I need data for? I collected about 1,500, all the firms as that were part of the S&P 1500. And then the next step was to identify the correct Factiva codes of those S&P 1500 firms. So at some point of time, around 2,900 firms were listed in the S&P 1500 between the years 1992 and 2019. And so for each of these 2,900 firms, we identified the correct Factiva code. And then while we were writing the code for the API solution, we made sure that the Factiva codes for both the firms as well as the news outlets were accurate. And then once we did that, the Factiva's API solution first checks with you. It's a great aspect of using the Factiva API codes. The Factiva API solution tells you that there are X number of articles that are available for download. Do you want to go ahead with the download or not? So once we realized that we had a manageable number of downloads and we were within the limits of the contract that we had with Dow Jones, we downloaded only those set of articles. So we were able to download about 1.8 million articles from Factiva for those 15 outlets for those 2,900 companies that we were interested in. And then after that, we then used some Python code to match the names of the CEOs of those 2,900 companies with the data that Factiva was able to give to us. And once we found those matches, we then classified the CEOs into different categories. We wanted to know whether high coverage CEOs that were always in the media spotlight, whether they were thinking differently from CEOs that received medium amounts of coverage versus CEOs that received low amounts of coverage. So the way that we did it was we said that if the CEO's name appeared in the headline or in the first paragraph of the article, then we classified that more than 3 times in a particular year, we classified those as high coverage CEOs. For those CEOs who got coverage between 1 article to 3 articles as part of the in the news, we classified them as medium coverage CEOs. And for those who received either 1 or 0 articles that in the lead paragraph or in the first paragraph of the article, we classified them as low coverage CEOs. And what we found out was that it is CEOs that receive moderate amounts of media coverage. These are the CEOs that are not always in the spotlight. By the way, I also want to highlight that it is a very, very, very small proportion of CEOs who receive the bulk of the media coverage. So, for instance, let's take an example of Elon Musk or Steve Jobs or Tim Cook or Satya Nadella of Microsoft. A very small percent of these CEOs who receive the bulk of the media coverage. But we find that it is a CEOs that receive moderate amounts of coverage. That means these are CEOs whose name appears in newspaper articles only about 1 to 3 times a year. We found that these are the CEOs who are actually more likely to innovate, as far as exploratory innovation is concerned. And we found out that this was because of 2 reasons. One is that a medium amount of media coverage will give you the right amount of managerial discretion. What do I mean by managerial discretion? It means that you don't have to ask your board for too many permissions, and by getting this medium amounts of coverage, the board thinks that we are speculating that the board thinks that okay, you're in the limelight, maybe everybody knows about what you're doing. And by here, what I mean by coverage is positive media coverage. We ran these articles through a software called Luke, where we were able to get the sentiment of the media coverage. So here, when CEOs receive positive media coverage in a moderate levels, it gives them a sense of managerial discretion. But we also know that media coverage can increase risk aversion, because when everybody is talking about you in the media, it means that you might be tempted to protect that reputation. You don't want to lose that good reputation that you have gained. Now, what happens when you have high levels of media coverage? It means that although you might have high levels of discretion, where because you are covered well by the media, you may not need permission to ask for different kinds of innovation that you're doing in your organization. It also is associated with a higher level of risk aversion. So that means, just think about this way, right? If you are somebody who's getting covered by the media, everybody wants to talk about you. On the one hand, it means that everybody knows you, and perhaps you are less likely to, you don't have to justify to everybody what actions you're taking as the CEO of your organization. But the challenge is that as more and more people are talking about you, it means that you have a greater reputation that you want to protect, and that means that it can also lead to risk aversion. On the other hand, if you are not covered by the media at all, even though you might not feel any risk aversion, it also means that nobody knows about you. And when nobody knows about you, it means that you might have to, for every small thing in the organization, you might require permission from the board. You also might require, people below you might not be convinced by your words and strategic inputs. So what we find, so in that sense, low coverage actually decreases decreases this discretion. So, but on the other hand, if you receive medium levels of coverage, it means that not only do you have just enough of discretion, but it also means that you are less likely to be risk averse. Okay, and so it's like this gives you this right combination of discretion and low levels of risk aversion, and that is leading to more likelihood that you are able to take risks, and more likelihood that you are able to take your firms through exploratory innovation. So that's one of the preliminary findings that we have, and almost all of the data for this came from Factiva. Of course, one has to keep in mind that we have to kind of manipulate the data, kind of understand what the data actually tells us. But The bottom line is that almost all of this research was, we were able to get because of using Factiva's API solution. Another question that we wanted to ask was there any role in the media coverage in reducing uncertainty? So what we wanted to find out was whether the stockholders and the shareholders are always looking for more information about organizations. For instance, they want to find out whether the political ideology of the CEO has any impact. They want to find out whether facial emotions have any impact. So what we found out was that when firms receive a large amount of media coverage, companies like Apple and Microsoft, Pepsi, Tesla, for instance, are always darlings of the media. So they receive a large amount of media coverage. So for companies that receive a large amount of media coverage, we found out that other aspects of the CEO become less relevant. For instance, political ideology or even the CEO's facial expressions. So if you're a shareholder who's watching an interview about, say, Elon Musk, in fact, what we are finding out is that those interviews and emotions of Elon Musk are become less important because Tesla has already been covered by the media in a very comprehensive manner. So in that sense, the role of the media is that the media reduces uncertainty that shareholders have about organizations. So even there, what we are finding out is that media coverage seems to have an outsized impact in what the shareholders are perceiving from the organizations and from the organization's leaders. So this is another study that we are currently in the analysis stage. We are hoping again that you will be reading about this in a good management journal. Our third study, this is again a very recent study we have started. So far we are happy with the analysis that we are able to get. We wanted to find out whether negative media coverage has any implication for CEOs. So what we specifically wanted to find out whether this negative media coverage has does it change the behavior of CEOs. So what we found out was that the reason why we wanted to ask this question was because theory suggests that negative media coverage is a source of threats. So just think about it. If you are the CEO of an organization and you read an article on the Wall Street Journal that is generally portraying you and your organization in a negative light, we wanted to find out what are the consequences of that for you as a CEO. So what we are finding out is that if you were a conservative CEO, and by this again, I want to remind our listeners and participants that by conservative, I mean conservative, you are more likely to vote for the Republican Party. Again, note that all my data that I've collected so far is with respect to North America. In other countries, there may not be such a strict divide between conservatives and liberals, but in North America, given my research context, there is a political ideology is a continuum, and if you are conservative, what it means is that perhaps you were less likely to vote for somebody like Obama or Joe Biden, and you were perhaps more likely to support the Republican Party. You were more likely to contribute to the Republican Party. So what we are finding out is that if you are a CEO and if you identified as a conservative, you are much more likely to be affected by negative media coverage. And the reason that is happening is because we know from political ideology literature that conservative CEOs are more likely to be affected by threats. And we find that when, although conservative CEOs are less likely to make R&D investments, the moment that they get negative media coverage from the media, it turns around. Okay, conservative CEOs are the ones who are more likely to increase R&D expenditures, even though this is not something that they would normally do. So we are really excited by these results. We are also finding that if the negative media coverage is coming from a conservative source, that means if it is coming from a source such as Wall Street Journal or maybe USA Today, which are more conservative outlets, the CEOs are in fact increasing their R&D investments even more than if the media threats came from a liberal source. So, I mean, this is to me, this is really cool insights. We are so far we are really excited by these results. We are further, conducting other tests to determine the boundary conditions of these results. So, the bottom line from that I would like to draw from these three research questions that I wanted to understand more about is that media coverage seems to play an outsized role not only in in what other stakeholders think about the firm, but it seems to play an outsized role in how CEOs themselves are behaving. So that's my summary of the research that I've done so far. Please do get in touch with me in case you have any questions. I would be happy to correspond with you, to interact with you, and I look forward to your comments and suggestions as far as these projects are concerned. So thank you.
All right, and we'll wait for Professor Anand to join, but in the meantime, we will start with our panel discussion. And for now, I have Kristen and Gavin on the call. I'll also have a quick look in terms of any questions which have come through our Q&A. If you have any questions, please send them our way. I'm happy to ask our panelists with that. So my first question, I'll ask Gavin. Okay. When you're handling such massive news archives, I think data collection and preparation techniques are critical, right? Can you share some of the best practices or challenges you have encountered while collecting data?
Sure. Yes, I can hear from you. So first of all, I want to say that you are very right that we spend months on constructing and cleaning the data set there, especially if we want to work on individual firm news. Okay, so one thing that Dow Jones data set, they provide the sort of code for us to match the company news there, because usually on academia we will play with trading data set like CRSP, fundamental data set like compute stat. Okay, so the first thing we are going to do that is how we merge the news, the individual company news, with their trading and fundamental data set on the other side. Okay, so that's the one thing. And of course, for this thing there, for company news, it is hard to say that this news belongs to, if we have a news article that covers Apple, Samsung, okay, and all other firms there, it is hard to say that, okay, this article is mainly about Apple. It is also related to Samsung in some levels there. So we have to merge the data set on a pretty carefully, and then this is the main challenge. I think if we want to work on the data on such micro level, then this might be hard. But if for example, for someone who might be interested in predicting the market level, like CPI, interest rate, other macro variables there, then they don't need to work on the fundamental side, on the micro side. They only focus on the macro news. Okay, and a lot of things so this is something I think is quite important. So when one want to play with the text data set, this is something they need to get their hand dirty, how to play. So many forms there. It is hard to merge them. But so it depends on the goals there. Okay, if your goal is to work on the macro forecasting, then you focus on the macro news, and your goal is focus on individual company stuff, then you focus on the aggregating by merging those individual news data there.
Thanks for that. And so this talks a bit about company mapping to the news, right?
Yes.
And I have just a follow-up question on that, and maybe even Kristen, you can jump in on this, because you talked a bit about metadata. So how important is metadata in deriving these insights? And what approaches you typically take to handle or leverage metadata in your research? Maybe Kristen, you want to take this?
Sure. Look, I think in particular, I guess I was referring to the fact that one of the things that we found in the previous research we'd done using gender analyses was it was really useful for us to be able to gather things like author data and to be able to have access to those sorts of things, publications and author data, helps us to address, and I don't want to sort of step into some other areas around ethics yet, but does helps us to really sort of understand some of those broader issues around the sort of social innovation challenges. So we know that the gender of authors has a real influence on the nature of reporting, the types of articles that are written and the like. We also know that the types of publications also sort of give you strong insights into where biases exist. So, for example, in something like climate change, we might be looking at sort of different political views, and those are sort of quite clearly sit with some publications versus others. So I know that in other research in this area, they will pick one left-leaning news source versus one right-leaning news source and use those and to say, look, we've got a fully representative sample. So that sort of metadata and that aspect of it is really critical to us understanding what's going on in these social topics.
Thanks for that, Kristen. Gavin, I thought you were saying something.
Oh, I'm not saying anything.
All right, cool. Okay, no worries. So while I have you, Gavin, I think you started a presentation with a reference to ChatGPT, and we know that the field of news analytics and natural language processing is constantly evolving, right? So with all these advancements in machine learning, deep learning, and all other AI technologies, how do you anticipate these advancements influencing the ways in which news data is analyzed and probably utilized for academic research in coming years?
Yes, so that's why I think this webinar is very on time for this very popular topic there. So one thing ChatGPT cannot do, that is because we know like ChatGPT 3.5, it is trained like up to 2021 July something. Okay, they use all information up to then. Okay, and then if we are going to use ChatGPT so one thing I want to point out that it is hard to use that for like back testing, because it already observed all the past data set there. So it already observed everything. So we cannot use ChatGPT to do back tests or start with the prediction for like past 30 years there. But however, for like the recent 2 years, okay, because we know it is not customized by everyone. If I have a news in 2023 March or something, then I cannot feed this article to ChatGPT there directly. Okay, so one thing that is for this kind of LLM, this large language model there for like individual, like retail investor like us, okay, it is hard for us to train the model or fine tune the model ourselves. Of course, for institutional investor, they might have the capacity to do something for that. Okay, they have the ChatGPT version at 2021. They fine tune their model with the new news article every month there. Of course, they might have the capacity to do something for that. So I think one thing that is quite important that is, I also point out that at the beginning of my talk, because now we are facing an actual high-dimensional world of text data. And then, of course, you can expect that 99.99% of the text you find from the website, from the internet, they might be useless for stored within the prediction. Okay, even for the news article from Dow Jones, probably just 1% or 2% contains the real signals there. Okay, so if we really feed that much thing into the model, into the machine there, it is hard to say can we really dig out the 1 or 2% signals out of everything. Okay, so I was said that, okay, the articles, the data we feed in the LLM is also quite important. And of course, if like news articles written by Dow Jones, then we have like a standard format for everything. This might be the good test we can use, okay, to feed in LLM. But for like most like tests we scrap from the internet, those might contain 99.9% useless information on somehow, and then there might be noise in the model. So I cannot say that ChatGPT or this kind of LLM model must help, but what I say, we can use some like useful data set and we shrink the data set a little bit, of course, and then in this case can help the model to perform better.
Okay, makes sense. Thanks so much, Gavin. Kristen, you also mentioned that you are already using unsupervised machine learning techniques for deriving sentiments and insights. How do you see these developments gonna help your research?
I think being able to use machine learning is it's an incredibly valuable sort of adjunct to the sort of social science tools. So, for example, frequently this sort of research relies on things like surveys and interviews and those sorts of methodologies, which have quite some ethical dilemmas sort of attached to them. You're talking about sort of primary research with individuals, and that generates some substantial, ethical, dilemmas. You've got to go through ethics committees and have a lot of things in place. And what I see the value of this, being able to use machine learning with these data sets, there's great value because we have another way really of accessing people's opinions and views. And there is an argument that because it's the media, it's a step removed. But I think that equally, I think because of the fact that we've got all of the different media outlets, and that is the strength. It's not just the big publications out of the major cities. There's a number of smaller publications that are accessible, so you can really get quite a spread of views. And because you've got that over such an extended period, I think that really does give us that strong insight into how people see these issues over time. The challenge, I think, often is for us to find people with the machine learning expertise to help us to work on these topics. And I know when I've worked on it in the past, it's because there's sort of connections between, say, the social data labs at the universities that I know of in Australia, or individual researchers who've got the expertise in these areas. At RMIT, we've got extraordinary data capabilities, and it's because of that we can do this research. But one of the challenges can be around the social sciences is that there's a bit of catch up that needs to go on there. And it's, I think it's really exciting to be able to, work with students and the like, so that we can bring the next generation of researchers through now, so that they've got the capabilities to understand how to work with such large data sets and how they fit into the sort of whole, spectrum of research methods and capabilities that you need to work on these topics.
Thanks, Kristen. And you brought up a really important topics, ethical considerations, right? Because news data is becoming more and more accessible and widely used. How do you envision addressing ethical concerns like related to privacy or bias and fairness when using news data for academic research in future?
It's like in many ways it's a solution because of the fact that you don't have to go through major ethical clearances and the amount of time that requires, and particularly if you're working with, say, vulnerable communities and the like, that builds in a lot of time, and it adds to the expense of research in ways that I think being able to work with data sets allows us to access some of these issues more directly. And so issues around privacy are addressed. It's a publicly available set of data. So we're not concerned about transgressing privacy issues for individuals. The fact that it's such enormous data sets too, it's all aggregated. So you've really covered off on those things. And as I said, bias is one of those issues that you can deal with by looking at your metadata, as long as you've got a good grasp on the perspectives that each of the media outlets are coming from, and that's a whole sort of political and media studies field in itself. But once you've got that understanding, then you can actually deal, I think, with bias in much clearer ways. So I think it's a real addition to working in social sciences that strengthens what we can say about these topics.
Thanks for that, Kristen. Okay, I'm going to look at the chat window and see what questions we have got from audience.
Yeah, I do see one question. I think I can help to answer that one. So
okay.
So he
for
asked,
the benefit of the audience, can you say what the question is?
So he said they have, so he asked the question, how we filter out those useful news, okay, for further analysis, okay.
Yeah.
So I would say that first of all, when we merging the individual news with individual trading fundamental data there, so this is the first step, filter out there. The second step, then usually when we work on, like, for example, like topic modeling. For topic modeling, So then, so for that case, there we need to work on those words. Okay, those like single word, like those word there, and then we usually do what we call correlation screening. So we try to search those like 200, 500, 1,000 word most correlated with stock return prediction. Okay, in the past data set, for if we use 15 years of articles for past data set there, we use those articles to filter, okay, what are the most likely occurrence for the word occurred together with the positive return. Okay, so that's what we call like correlation screening. So we use this kind of method to filter out important or useful word there out of the high dimensional data set.
Thanks for that. And I think there's a follow-up question as well, that what company identifiers did City University use? So you talked about company mapping to the news. What identifiers did you use for your research?
Oh, so for to identify the news there, okay, so of course the news archive dataset, they provide a code for us to have to, so this how we have a log. Okay, so and in addition to that, so as I mentioned that like for news that covers Apple and Samsung, then we need to confirm so which one is the primary coverage from which one is the second primary coverage from there. So for this kind of case.
Okay, thanks for that. And there's one more question that about how will RMIT's research impact financial literacy in Victoria and or Australia?
Look, it's a great question, and I think this is what we will be working with our partner Good Shepherd to talk to them about. What are the sorts of messaging they think that the media needs to be sharing, and how we can work perhaps with our journalism colleagues to to really get that out and disseminate that. I think. Arguably, we would like it if the media saw itself as having a social role to improve financial literacy, and so I think what it does is it gives us a sort of starting point to sort of say, look, if you think that that people are able to read their daily papers or get their daily news feeds and learn more about investing or some of those other issues, it might be that that's not a source of information that they can rely on, and so it might be that organisations in the community could ramp up the sorts of information that they make available and the avenues through which they make it available. But these are the sorts of things that we'll work with our partners once our topic modelling is settled on to determine the best ways forward, along with, I think, our media and journalism colleagues, because I think they they're aware of the rapidly dynamic and changing field of journalism in this area, and would be keen to look for new ideas and ways forward too.
Thanks for that. And we have Anand back. Welcome back, Anand.
Hi, thanks, Sachin. Apologies to all the participants. I don't know what happened.
No worries. So what we're going to do is we'll continue with the panel questions, because I think we have only 9 minutes, so it won't do justice to your presentation. We would ask you, if you don't mind, to record your presentation. So when all the attendees will receive this recording, they will also get your presentations as well.
Sure.
And since I have you on, I think one of the questions which also was asked on the chat, and something I covered before, but I want to get your views on is, one is how to filter news for your specific use cases.
Yeah.
And then also how we can leverage metadata in deriving insights from news data.
Okay, thanks, Sachin. So I will take the first one. So one of the learnings in using Factiva for the last year and a half has been that especially when one is using the API solution, there is a tendency to underestimate the amount of data that there is, right? And we also each institution has got a limited number of articles that they can download. We don't have unlimited articles that we can download. So one learning for me personally has been to be very careful about what it is that I'm downloading. That means if I'm working with US data, America has got about 4,000 daily newspapers. So if I were to choose all these newspapers, I would run out of my download limits. So one thing that has been for me a best practice has been to identify in advance what are the newspapers that will likely have the most impact, maybe in terms of circulation numbers, maybe in terms of popularity. And then once I identify those limited set of newspapers, I then identify the right factiva codes, and then only whenever I'm writing down the code for the API, I make sure that I'm only restricting it to those particular 20 or 30 news outlets. Because we also know that a disproportionately small number of of outlets have a large amount of information. Let's say, for instance, a New York Times in the US has a very very high level of influence. I mean, even if you take 500 other smaller newspapers, it is better to just download data from the New York Times, because that's the one that everybody reads and has the most impact. So one learning has been that to really be very careful in identifying the right sources for which you extract data. The second thing is that in terms of how do I use the data, so one thing is, I think, I did while I was logged in the earlier part of the conversation, I heard Gavin, talking about, how one has to be careful about, when you have the kind of, whether you're using JSON files or something like that, one has to have the expertise to convert them into CSV formats or to any kind of format that is good for you. In my case, I use a statistical tool called Stata, and then I have to make sure that the formatting is right so that I can upload it onto Stata and then use it well. In terms of using the metadata, I use a very simplistic, at this point of time, I use very simple software called Luke, which is a content analysis software. I run all the news articles and get the positive sentiment, negative sentiment, things like that. Very recently, I've started using topic modeling also, where this is fairly exploratory in nature to understand what it is that CEOs are talking about. What is it that is reported in the media, vis-a-vis what is reported in the press releases. Now, both of these things are available from Factiva. Factiva also has sources for press releases of that companies regularly give out. So in that sense, it allows me to do a great comparison between what is it that the media is reporting and what it is that the CEOs and the organizations themselves are saying. So these are some of the ways in which I use that. But for me, the greatest learning uh, has been that sometimes we equate large amounts of data with high quality data. It is possible to download a small amount of data from Factiva and get really, really good insights if one is very careful. What I'm saying is that one doesn't necessarily have to have a million articles. One can even have 100,000 articles and extract very, very meaningful information, provided that you are doing your sampling very carefully and very accurately.
Thanks so much, Anand. Those are really useful tips, and especially people who are starting out in their journey in terms of using news as data for their research projects. So just adding on to that, and I'll start with Anand, and this is a question for everyone, so we'll take chance. As academic researchers, what advice do you have for fellow researchers who are interested in utilizing news as data for their research?
Um, okay, so my first piece of advice would be, I think this is a great choice, because one thing that I know about media is, and in my field, it was in the early 2000s that the first articles about the media as a source of reputation came in. Okay, this was a David Deepau's article in 2000 in Journal of Management, and I will tell you, media is one of the few areas in research, at least in managerial research, that has not reduced in popularity. It still continues to remain a very actively researched topic. Everybody is interested. The only thing I would say is that uh, is when we think about, like, more and more researchers are calling into question, uh, what does something really mean. For instance, if there is a news article and the news article is largely carries a positive sentiment, uh, more and more people are questioning what is the meaning of that positive sentiment. uh, does it mean that the CEO is seen in a good light? Does it mean that the organization is seen in a good light? Does it mean that the journalist is deliberately reporting something in a positive manner? And even once all this is considered, for a potential reader, if a CEO is looking at that article, what is going on in that person's brain? Is that person also thinking of themselves as being seen in a positive light? So these are questions one has to. I would suggest to consider these questions before getting into formulating your hypothesis, because otherwise you don't want to get stuck after writing a 50-page paper and then researchers asking you very kind of basic questions. What does this mean? So operationalization of the media data, it is very useful to think about it from the early stages rather than just download data and then see what happens.
Thanks for that. Kristen?
Look, perhaps simply, I think it's really worth making connections with researchers who have these capabilities. This seminar is a great opportunity, but we have social data labs here in Australia who work specifically on social topics using these big data sets, and I think reaching out to those groups is a key way forward.
And lastly, Kevin, your thoughts on this?
For my advice there, so I would say that, okay, because right now we have like something like Rhythm Pack, they try to generate signals for you on the data set there. However, sometimes we have different goals for the study. If we want to have different goals there, you need to customize your own signals. So on this kind of case, you cannot rely on those like process signals. We need to deal with the raw data set. For the raw data set there, if we really want to get like a long period for data for news articles there, you cannot scrap the news article from the website. Of course, for scrapping, we can only do 5 years, 10 years at most. Okay, we cannot do 30 years there. So for this kind of case, we need to rely on like the Dow Jones News Archive. Then we can access all those like past 40 years of news articles there. So I think these are all my advice there.
Thanks so much, Kevin. I think we are just back on time in terms of time. So thank you so much for your time today. I think it was amazing to see various topics, right? We covered right from generating alpha to financial well-being to social innovation and also climate change. It's a pretty, so everyone, there would be a survey right after this. So make sure that you opt in to receive communication so that we can send you a recording of this webinar and also Anand's presentation as well. It's a very interesting one where he has connected the dots between media coverage versus CEO's influence. So don't miss out on that. So and in terms of just a quick wrap up on what we discussed, we definitely see there are much more implication in terms of different fields where news data can be used. So we already have many academics across the world. They have gone from economics to political science to social sciences to generating alpha to climate change and its impact on certain commodities, asset pricing. So all of that information, we publish it on our blog, so you can have a look at that as well and we'll send the link. So thank you so much, all the speakers, for joining us today. And it was a great session. And I hope everyone enjoyed it and learned something new today. Thank you for your time.
Thank you.
Thank you.
Bye.